Hey, this is Sasha. Thanks for joining me in today's video. And what I want to share with you today is how you can still be a winner in the stock market, even though you might be losing, let's say, week after week or month after month. This is really a mentality shift. And once you see it, recognize it, and understand the business, you'll get what I'm talking about. So stay tuned. I'll share with you this insight here in this video. All right, so let's say you're trading month after month, could be even year after year, and you're losing. And you might be thinking to yourself, man, I'm horrible at this. I suck at the stock market. I'm not doing great investments. And that might be the case, but you have to understand the business. How does a normal business work and function? So some of the things that I'm going to mention to you here is not anything crazy or different. It's just a little bit of a mentality shift for you. So if you look at a regular business, let's say you're operating a t-shirt printing business, and you go in and now you have to go ahead and buy t-shirts. Well, that's money coming out of your pocket to be able to print logos on t-shirts, money coming out of your pocket. If you go in and buy ink for that screen printing, again, money coming out of your pocket. You buy new computers, money coming out of your pocket. So that's negative. When you go and get customers and they pay for your products or services, that's money coming in. In the stock market, we have the same concept, is money comes in, money comes out. Very simple concept. And that's what you're really doing. Now, the thing is with the market is you're typically looking for appreciation, right? Buying value, growth stocks for appreciation, but at times the market goes down. And there's usually times and periods where it goes down quite a bit. So if we go ahead and take a look at kind of just a general investment, let's just look at the S&P 500. On average, let's just take 2018. They say about 8% a year on average that you're going to make, sometimes more, sometimes less, depending on how crazy the market is. But here, if you go from 2017 to about 2018, you're looking at about 19% return on investment or growth. So that's pretty fantastic, right? And if you go from 2018 to 2019, this one was actually down 10%. So in other words, from certain times, here's another one from 2019 to 2020, where you're up 36%. So again, they're averaging and looking at averages of about 8 to 10%. So let's just call it, for conversation's sake, 10%. So if the market's returning approximately 10% per year, so if what's happening is you're returning 10% a year, that's all fine and dandy. But what happens if the market is returning a negative 20%, okay? And now what's going on is your loss is, bad marker. So if you are losing, and you're losing only 8%, all of a sudden you're way ahead of the game. From a business perspective, you're doing well. You need to recognize and understand, hey, in this case and in this scenario, you're doing just fine. So if you look at this concept of, hey, understanding what's going on with the markets, with the movements, is that if you basically have a market that's just depending on market returns, and the market returns 10%, and you're returning whatever, somewhere in that range, that's great. Everybody always feels happy about that. So even if you're making 8%, you still feel good. If you're making 14%, you're like, hey, I beat the market, but you're still feeling good, even if at 8%. The problem is when you're starting to lose, this is where the issues lie, is when you're starting to lose 3%, you feel bad about yourself. Or you starting to lose 7%, you feel bad. Maybe you're losing like 14% and you feel bad. But what if the market was down 46%? And you're only down 14, that's pretty good. Okay, so you have to recognize that there's different times and different peaks at in industries that, markets fluctuate, and just like a business fluctuates, businesses have seasonality. Let's say you operate a Christmas store. Well, of course, in the summer season, you're not going to get a lot of Christmas sales. That's just a fact of the business. And in this business, the fact is markets go down. And if you have long investments, just like we do with option trading, if you have long investment portfolio, meaning for appreciation, for stocks to go up, ETFs or indexes to appreciate, then yeah, you're going to have periods in that section of your portfolio that are not going to do as well. And if you're at least managing those losses and you're not losing as badly, it allows you to buy and pick up more shares or value at lower prices and lower levels, so that way they can continue to appreciate into the future. So in either case, my point here in sharing you this concept is that understand and recognize that in the market, just like a business, you're going to have some downtimes. You're going to have money that's losing or depreciating, or the things that you're holding are going to lessen the value of them. And that's just part of the business. But if you can just keep those losses under control without getting too crazy, then you should do fine and survive the winter months, you could say, just like in a certain business where there's slow times and bad seasons. And if you can do that without losing as bad as the market is, then you're doing just fine and just well. So keep your chin up if you're doing bad. Just recognize what's going on in the marketplace, recognize what's happening in the world. But of course, if the market's continuing to appreciate but you keep losing, it might be wiser just to buy an ETF and just hold on to it and just let things sit and ride. So again, it takes time to be more active and be an active trader. But if you're struggling with it for a few years, just put your money in a couple of good ETFs, long-term value, let them sit, and just let it do its thing. That's probably the simplest approach. But anyways, I want to share this insight with you because I've seen some people that really complain about, hey, I'm losing badly and I'm not doing so well. But if the market's not doing well either, and you're way ahead of that and you're managing your losses well, then that's really an important point. So thanks for sticking with me. Thanks for watching my videos. Feel free to subscribe to the YouTube channel, check out some freebies that I have on the website, and also check out more great videos. Thanks again, and I will see you next time.